grows to 365,8475. So how we saw the capital gains was at expecting at 275,000. Now when Rosemary passes away at 83, the death benefit has actually grown from $275,000 to $365,000. So actually 300,000 to $365,000. Now imagine the children are going to get that tax-free death benefit. That $365,000 is going to pay off that $300,000, and still the money is kept there, right? The goal over here is that a lot of people are not understanding. They do understand the principal residence exemption. They understand the value of that of the principal residence, but they do not understand of the investment properties on the cottages that is going to contain a huge tax bill. And they feel that they're going to pass this property to their children, but not understanding with the fact that there's going to be a huge tax bill. And if the tax bill is not paid, unfortunately, the children are forced to sell the property, right? And you know that the property doesn't sell in 1 or 2 days. It does take time, right? So now you're forced to sell at a lower price, below market price, whatever it is, right? And you did not, the one that who intended to get this property to the children, the goal was actually not accomplished, right? So this product is very much suitable for estate planning. We have to understand 1 trillion of money getting transferred to the beneficiaries now. And this is a very important concept that a lot of people have no understanding about. And this product does come in. It's not just about the product, it's a whole concept that, hey, you know what? We got to be prepared. We got to have this written down in our financial plans because this is going to come soon. And the baby boomers market is the largest market in Canada. We specifically decided to be strong in this market. We didn't decide to be strong in different markets. We decided to be strong in senior market clients because we know that A, it is the biggest market in the Canada, and B, there's going to be a lot of transfer that's going to happen. But anyways, this is a concept where I want you to understand that these tax bills need to be covered. Either the client can pay it at the fair market value, which a lot of people probably wouldn't do that because why would I spend all the cash from my pocket today? Versus they can buy an insurance to ensure that the tax bill is paid as soon as someone passes away and there's no hassle to the beneficiaries and the goal is accomplished of the property to be transferred in a smooth manner. Okay, so just one example that I wanted to start over altogether. But you know what, I just want to make sure I show you a few facts about this presentation. Okay, I'm not going to go through a lot of slides. It's more about going and telling you the actual numbers. Okay, so as I said, my name is Saurabh Niban. If you do not have my number, please ensure you take down a screenshot of this. I want to make sure that everyone is helped and assisted all the time. I do cover Alberta, North, and Saskatchewan. So if you have a team in Saskatchewan too, I will be there to help them out. Okay. But the point over here is, as I said, I'm not going to go through a lot of slides today, but it's more about the whole life. So you'd say, hey, you know what, Saurabh? Foresters has this whole life, which is great. But you know, our competitor has whole lives too, which is awesome. Everyone has their own strengths, right? But I want to make sure that, as I said, there was a lack of information about this product, lack of training. And now I'm going to show you the actual numbers of how competitive we are, how we stand in the market. We just don't say that we're number one. We are actually number one in our senior market clients. So there's few things about our product. It's called the Foresters Advantage Plus Participating Whole Life. Don't go with the fancy name. It's one product, Participating Whole Life. Okay. Anyways, we're going to talk about the key markets. And I just want to make sure you understand the key aspects of the financial strength of the company. Now, CPP has been there for 30 to 35 years, right? When Foresters bought CPP out in October 2020, Foresters has been there for 150 years. So 150, that's a long time, serving in 3 countries, Canada, US, and UK. So it's not a small company. And that's how we see this financial strength of the company, right? 2.1 billion with a B in surplus and a LECAT ratio of 165% plus. That is huge. That just basically tells us that how much of a capacity this company has in terms of the capital strength. So in terms of the claims, when the company, the client is paying all these premiums to ensure that something happens, they get the claim out without the hassle, right? Now, they have this huge amount of money sitting in cash. So why not think about a company who has already got all their ducks in the row, right? So just want to ensure the number, the reason why I'm showing you the number is to show you the financial strength of the company. The average is 139, but we're still way ahead of that, okay? I just want to give you a small example. I'm not going to go through what is best, what's is universal best or is whole life best. No one product is suitable for one client. Everyone has their own needs. Everyone's journey is different. But I'm going to ensure that I explain you the strengths of the whole life in the overall market, not just with our company, in the overall market. I want you to understand the sales of whole life versus universal life. Okay. Look at this 2020, a sale of $147 million of universal life. For 2020, whole life was 574. Similarly, in 2021, universal life was 182. And for us, 2020, it was 812. It is safe to say that it's 5 to 6 times bigger in market when it comes to sale of whole life. Why is that? Why is that, right? The whole reason of having that big sale of whole life is because everyone requires guarantees. Okay, everyone requires guarantees, and this is suited specifically. Our product is suited for someone who are not interested in performing all these semi-annual investment reviews. Okay, they're like, hey, you know what? I'm not interested in doing these reviews every year, changing these asset allocations, changing this fixed portion of equity and whatever it is, right? I'm not interested in completing risk assessment questionnaires. Hey, I don't want to answer those investment objectives, time horizon. No, hey, you know what? I'm here for my life insurance. Okay. They're more certain on the death benefit. They're like, hey, you know what? I came down to you, asked you for a $500,000 coverage, and that is what more concerns me. $500,000, that is what's important to me. That is it. I prefer guarantees over flexibility of premiums. Hey, you know what? You told me that if I pay $200 today and I'm going to get $500,000, is that correct? Absolutely. Is that guaranteed? Perfect. No worries with that. That's absolutely guaranteed. I'm done with it, right? And I prefer my investments and insurance to be different. Hey, you know what? I really like my TFSA investments. We can take some risk on my RSPs, non-registers, RESPs, whatever you name it, right? But I want to keep my investments and insurance separate. Okay. My insurance is something that I want to, hey, you know, I want $500,000 and that is it. Done deal, right? So as I said, everything is guaranteed with our product. Everything is guaranteed. So when you talk about guaranteed premium, guaranteed death benefit amount, guaranteed cash value, guaranteed non-forfeiture values, guaranteed loan provisions, everything is guaranteed. Okay. As I said, I'm not going to go through a lot of stuff, but I'm going to show you only the sweet points and some numbers today. Okay. Where do we stand strong? Okay. Very simple and straightforward. Don't want to waste your time. Where do we stand strong? So estate planning, the first thing that I showed you this morning. As soon as when it comes to estate planning, our product is the best. Okay. Someone who's age 50 plus, I would even say 45 plus. As soon as the client is 40, 45 plus, we take the market. No one beats us. And I don't tell you to trust me. I'm telling you to even run some numbers, do it with our competitors, but I can tell you that our numbers are the best. Okay. And it's not by $1 or $2. It's a huge difference that you will see. Okay. So again, I really want to make sure that you do the comparisons. But anyways, smokers, as soon as you see smoker, doesn't matter what the age is, even if it's 18 years old, if we have a smoker, it's a done deal. We will take the market. The reason being is usually you know that if someone who's a non-smoker is paying $100, a smoker has to pay $200, right? Well, in our case, we have something very exciting. I'm not going to say we are smoker friendly. That's a wrong term to use. But I would say that, you know what, if they're paying $100, we'll give them 2 years of non-smoker rates. Okay, so even if the client is a smoker, we'll give them 2 years of non-smoker rates. And in the third year, hey, if they quit smoking, great, they get the non-smoker rates anyways, right? But if they don't quit smoking, we're not going to increase the premium from $100 to $200. We're going to increase it to 100 to 110, 120, 125. Like imagine that, where a lot of smokers who are trying to take a step back from getting an insurance just because they're feeling that they're not affordable in terms of paying the premiums. Imagine them getting this product, right? Now, as I said, one more thing that I would focus is rated client. So someone who's rated at 150, 200, 250, 300, whatever it is, right? We are not going to double or triple their numbers. Again, we're going to increase just by bit. 10, 15, 20%. And imagine, I've got so many cases where it's like, hey, Saurabh, the client was rated at 250%. I don't think he's going to be able to afford it. Well, did you run an illustration? Why did you assume, right? Let's not assume, let's do an illustration, because I can tell you it's going to be a few dollars more and the client can still afford it, right? So I am just going to ensure that we understand few things here. I just want to make it simple. There's 5 options over here within this product. Okay. The only options that you got to use is the enhanced, and the second is paid up. Okay. Do not worry about the rest 3, just the enhanced and the paid up. These are used 99.9% of the time. You always have this available, but again, it just doesn't help you a lot. But point is, enhanced is the cheaper one. Paid up is the expensive one. So I would say, let's say, and what is the difference between enhanced and paid up? The face value is going to be same. Let's say the client is looking for $500,000. But client is like, hey, you know what? I want to pay less of premiums. I do not worry much of the cash values, but I want the premiums to be most affordable. Okay, you go with enhanced. But someone is like, hey, you know what? $500,000 it is. You know what? You told me a bit expensive premium. I'm okay with that. But my goal is cash value. Okay, that's the time you go with paid up. Now you have both the options available, but our enhanced insurance option is number one in the market. So I'm going to tell you one thing, but again, 25,000 is the basic limit minimum. You can go up to $25 million, no worries. But on the application, it's up to $5 million. So like on an illustration. So on illustration, you can just go through $5 million. The reason being is if you want to go more than $5 million, give me a call. I'll get a specialized Foresters person for you, and we'll give you preferred rates so that you don't have to worry through it. We'll help you with all these numbers and all that stuff. Okay. No paramedical or lab work required for coverage up to $100,000, and that is for ages up to 60, and up to $500,000 for ages up to 45. So again, as soon as you do an illustration, you'll come to know over there, right over there, that whether what you need. Do you need some paramedical? Do you need some lab work? If not, well, there you go. You don't need it, right? Now, why do I say our numbers are great, right? And why do I say about the rated clients? So I talked about estate planning. We take the market. Someone who's 45 plus, we take the market. Someone who's a smoker, we take the market. And someone who's a rated client, we take the market. So let's even consider this. Someone, and these are actual numbers, okay? 45 non-smoker, 20 pay. And the most cheaper one, right? Enhanced insurance option. If the standard rating is $191, and if we get 300% rating, look at this, going to 259, right? 191 should technically multiply it by 3 times if he was rated at 300%, right? But we don't do that, right? So I've got so many cases where someone's like, hey, Saurabh, from this company, we got it at 225% rating. Can Foresters do something? I'm like, I can bet you on one thing, our premiums are cheaper. If he's a rated client, we take the business. I can tell you one thing. Even if it's a normal client, our premiums are still affordable and are very competitive. But if it's rated from somewhere else too, it's a done deal. Okay. So again, standard rating 163, and again, 300% rating of 213. It's a huge number, right? There's not a lot of gap over here. It's just 163 to 213, like what, $40-$50 difference, and still getting whatever premium they're required for. So it's huge, right? Again, we got policy loans as well. We got it through Equitable Bank. So not Equitable Life, we got it through Equitable Bank. We got a partnership with them, and you can access up to 90% of your cash value. Okay. Now, you go to the bank, and I can tell you one thing, you go with banks and you tell them that, hey, I've got the whole life and I need a loan. The bank gives you a loan like this. Why is there a reason? Because they know it's an insurance company. It's guaranteed. It doesn't matter what the markets do. It doesn't matter what the investments do here and there. The investment company takes all the risk, and they take care of all the investments, and that is it. So they don't have to worry about it, and you can access up to 90% of the cash value for any investment opportunities. So imagine the business owners, right? Where they're like, hey, you know what? We've got this policy. We got, let's say, 100,000 in cash value, and you're telling me that I can access up to $90,000 of cash value to invest in anything else? Maybe buy one more franchisee, maybe use it for other operations. Any investment opportunities can be grabbed to it, right? So few things that I want to show over here is the quit smoking incentive plan. So let's go through quickly one thing, right? John and Cindy, they want to purchase a permanent insurance whole life. So they're like, hey, you know what? We want to buy this whole life through you guys. We both vape and we worry about our premiums going to be a bit high. But hey, you know, the advisor says that, you know what, let's go with Foresters and let's go with the quit built-in smoking incentive plan, right? Now they both are smoker, right? They want to purchase this life in the early life to maximize the investments. But let's look at the numbers, and these are real numbers, okay? Now, company A, right? Company A's premium is going to be for John is going to be 2199. Okay, so John and Cindy, they both are age 30. They're $100,000 each. Enhanced option, they're standard smokers, and they're 20 pay. So company A is asking them for 2199. So let's say $2,200. Foresters premium is going to be 1316. So 2,200 to 1316, okay? Savings over 2 years between these amount is 1765, and between 20 years is 17651. But let's say John and Cindy are like, hey, you know what? We're not going to quit smoking. Even then, from 1316, it's going to 1658. It's still cheaper than 2,200, right? Like, that is the beauty of our product. As soon as it's a smoker client, we take it. As soon as it's a rated client, we take it. As soon as it's a senior client, our premiums are the best, right? But this is not known in the market, and that's why I'm doing a lot of these presentations to ensure that we understand this. But you know what? Let's look at this. What's a rating, right? Sorry, we're talking about a lot of ratings. Well, we're number one here. There's no one beating us on that end. And I'm, as I said, I'm not telling you that like, hey, you know what, I'm going to beat you in the younger client market because our competitor will beat us. That's going to be very straightforward. But if the client is younger, but is a smoker or he's rated, we take it. And if the client is anyway senior, and even if it's a smoker, non-smoker, doesn't matter, we still take it because that's where we're strong in the market. Let's say, third year, if they still continue smoking, we still got the #1 rating. So there's this lack of information that our product is not competitive because I want you to try those premiums out. It's the best in the market. And anyways, we're going to talk about all these member benefits that comes along for free with that. But imagine like these real numbers: 100,000 face amount, female age 55, non-smoker. 100,000 face amount, monthly premium, 20 pay enhanced option. Our competitor is asking 391. The other competitor is asking 335. We're asking for 229, right? Like that's again a huge difference. If someone actually wanted to pay $391 or 335, we don't have to give them 100,000 coverage. We can give them 173 to 148,000 coverage. So this difference, let's imagine a situation where the client actually is ready to pay $391 and we are offering them 229. Obviously, we know that the first thing, like if something happens, the client, let's say the client's financial situation goes in some difficult ways, the first thing the client will cancel is the insurance. 200%, right? They're like, hey, you know what? I'm not going to cancel my pre-authorized contribution to TFSA, my investments, all that stuff. Insurance, I'm going to cancel it. But how about from day one? You understand the strategy. How about from day one, we do this thing? If the budget was $391 or $400 roughly, but you actually give them for $230, and that $170 of a difference, you put that into a tax-free savings account, making that 6-7% interest rate, right? You put that money, and you can even name them an insurance TFSA account, whatever, right? And let's say in month 15th or 16th or 18th, the client gives you a call that, hey, you know what? I need to cancel my insurance. You're like, hey, don't worry about it. Your TFSA has actually made some money. You don't have to cancel it. We've got some money saved from you. Now, with one stone, you're hitting two buckets, right? You're doing insurance as well as you're doing investments. So we have to strategize in a way where we have to give them the lowest premium possible for the highest face value, but also to ensure that we do our investments on the side so that when it's time to cancel it, you already have the backup ready, right? Again, even with 200% rating, 259, 228, and ours is at 156. That's a huge difference. It's not talking about $10, $20 difference. Our competitor is not beating us. We're the lowest in the market. The only problem is that it was a lack of information. And I highly encourage you guys today, even after this, I really want to ensure that you understand this product and start using it, because this will save a lot of money for you guys. So imagine those clients who already have the smoker rates for somewhere else, someone who has rated clients and they accepted it. Imagine their premiums right now with us. It's going to be it's going to be a huge difference, and they'll be super happy that you reached out to them saying that, hey, you know what, Mr. Cindy, I'm here to save some money for you, right? So again, as I said, even with universal life coverage, we beat them in our senior market, 227, and we're asking for $160. It's a huge thing. Within these 45 minutes, I can't accomplish a lot of things, but the whole point of me doing the presentation today is to explain to you that our product is not suitable for everyone, but it's suitable for someone who's a senior client, someone who's a smoker, someone who's a rated client, and someone who's most concern, or I would say the goal is to get estate planning needs completed. Senior clients done, right? Someone who's a younger client, I can tell you that we're not strong in that market. Very much straightforward. We're not strong in that market. But if the younger client is a smoker, or if the client is a rated guy, we take it. There's no way that they can beat our market. But anyways, the point over here is Forrester's member benefits, right? As I said, I always say this, I can spend a day talking about this. There's these huge number of benefits that you get through Forrester's. And even if you're a CPP client, because CPP and Forrester's merge together. So even if a CPP CI, you have it. The goal is that the face value has to be 10,000 and more. But even if you have a CPP CI or a CPP insurance or Forrester's whole life, you get all these amazing benefits. And I can talk for days and days about this, but we do not have any competitor who gives these much of member benefits. Law Shore platform, right? You might guys know about it from different competitors too, but we provide free will kit, free power of attorney, free health directives. We provide all of that for free. We provide competitive scholarships. If I want to go roughly through it, competitive scholarships, $2,500 4 times a year. So $2,500, $2,500, $2,500, $2,500. You can use it. We all know how education has become expensive. And now if you're getting Foresters giving you $2,500 for free, like why not? The reason why Forrester does is because the Foresters is a not-for-profit organization. It's a kind of a mutual company where it gives back to its members. It's owned by its member, it gives back to its members. So we do not have any shareholders that we need to please, which means there's a lot of our profits we do not have to give to our shareholders. We provide it back to our communities by going through all of this, right? Orphan scholarships, around $6,400 that's been given to orphans, right? Orphan benefits. So let's say me and my wife, we pass away in an accident. My beneficiary is obviously gonna get that the death benefit. But let's say my kid was 5 years old and me and my wife pass away. My kid will get $900 per month up to the age of 18. So $900 per month up to the age of 18. So let's say $10,800 every year that's been given by Foresters to that kid for free, right? Lifelong learning, all these courses about, hey, I want to learn about math, finance, geography, science, whatever it is, right? All these courses almost range around $1,500 a year. You get all these courses for free for learning. So imagine your kids learning all of this. Imagine yourself accessing few courses to learn few things, right? Everything's for free. Terminal illness loan, something comes up. Hey, you know what? Hey, my doctor told me I just got to live for 3 weeks and then I'm done, right? I just got 3 weeks. What you can do is you can access 50% of those cash value and you can just go, and the interest rate is going to be zero. So no interest rate on that. And you can do whatever you want, right? You want to provide some gifts to your family, you want to go for a trip or whatever it is, right? And at the end, whatever money you loaned it for, the death benefit will eventually pay it off, right? So you took $50,000 and your death benefit was $200,000. You minus it, you get $150,000, right? Fun family activities, so many member deals, discounts on movies, discounts on shows, magic shows. There's no hotels, flight tickets, whatever you name it, right? All these discounts available for you, and you can't have it on a regular site. You get all these discounts just because you're a Forester member. Community grants, again, if you want to host a big show down here just to help out the community, you get up to $2,500 too. You can arrange it. You don't have to spend any of your money. That's there. We have Foresters Go, which is again an application to ensure that you get healthy, and you're trying to make sure that, hey, you know what, I'm going to the gym, I'm going for a walk, and I'm collecting points, and through those points you can collect anything. So we have so many people, and we have some actual witnesses from WFG where they've bought Apple Watches, Lululemon gift cards, Apple gift cards, a lot of these stuffs, right? So again, the app looks like this, but the member benefits actually sells everything. It sells everything all together, right? And plus, you're number one in the market. There's no one like the cheapest premiums in the market. As I tell you, this probably might sound new to you, but it's only because of the lack of information. But this product is a game changer, and once you understand it with all those guaranteed values, it's a no big deal. So if someone even wants today, or like down the line where someone is like, Saurabh, I need a training for my team specifically for this product, give me a call. I can tell you that we talk about 5.5% dividend scale, which is great. 5.5. Oh, other company would give whatever, right? 6.57, right? Well, I want to tell you that the dividend scale has nothing to do with the rate of return. It has nothing to do with the rate of return. I'll show you quickly today as well, but it has nothing to do with it. So next time someone tells you that a dividend scale is this, please ensure you ask them, okay, dividend scale is great, but what's the rate of return on my cash values, right? And you have to understand that if someone is telling you, hey, you know what, this cash values are greater. Well, imagine one thing. If I'm putting $100 and this other person is putting $500 and we both get 10% return, who's going to make more money? Obviously, the person who put $500 because he put more money. Similarly, if the competitor is putting more money and we're putting less money, for example, in terms of the premium, and we get that 10% return, obviously the cash values are going to seem higher, right? But the point is that do you want to lock all your funds in a life insurance, or you want to diversify your portfolio and invest more on TFSAs and RSPs and take those tax advantages and get your life insurance needs met too, right? So I'm not going to go through a lot of these things today, but again, this is, if you know it, CPP and Foresters, right? If you still get a decline from Foresters, you still got CPP, right? We know it's CPP, there's no market. We got our niche market in unhealthy markets. So if Foresters declines you for something, well, you still know that if Foresters declined you, meaning everyone else is going to decline you. That means that the only option that you have is CPP. So we got the best of both worlds now. We got CPP and Foresters over here, right? But just understand the basic fact, CPP is for unhealthy clients, right? Someone with some health issues or a history of health issue. Foresters is for somewhat called as healthy clients. Okay, so I wouldn't say healthy in a way. Healthy is a broad term, and my meaning of healthy would be different for everyone else. Some minor things here and there is okay, but again, not someone who had a history of cancer and heart attack. Obviously, that's a big deal. You just got to go with CPP. But one last thing, you know what? I'm going to go through an illustration today, and I want to make sure that before I go to illustration, I want to share some exciting thing that I was trying to hold it over here, right? So CPP, we got our unhealthy market, right? Which is great. Everyone knows about CPP. Everyone is comfortable with CPP. Those who are new can always give me a call. We can walk it through all together. But CPP is easy and straightforward, right? Foresters, now you got this whole life, right? Which is great. Now we have an understanding. Well, hey, this is very competitive. The premiums are the most affordable. The cash values are stronger, and you get all these amazing member benefits, which is great. So this is strong. But the exciting news that's coming up right now is that we have got our Foresters term approved through WFG. So Foresters is coming with their term product. Okay. The tentative date is November 26, 2023. So 2 months to go. Okay. It's been approved by WFG. We're in the back end with the IT team to get it linked with the WFG platform. But the point is, again, this product has been there for a long time. It was there on different MGA channels. It just came now on WFG, which is great. But I want to tell you one thing. Those who don't do a lot of term, I want to tell you one thing. This is the number one in market. There's no one who comes close to us. No platinum partners, no one else next comes to us. We are the most competitive in the market. There's one thing that I want to make sure that you know about it, as I like to say all the facts, right? There's 1 or 2 ages where you'll see, hey, you know what, Saurabh? Foresters is number 2 or 3 in term. And you know what the difference is? Because I've done the calculation. The difference is 20 cents a month. The difference is 10 cents a month. Imagine 10 cents, whatever, $1 a year that's making a difference, but you're getting all these free member benefits, right? What's the comparison, right? There's no comparison. I can tell you the people, the companies who are actually beating us with 1 or 2 in some of the ages. Most of the ages we're number 1, but in some of the ages where they're beating us, they're not even platinum partners. Okay, so they're not even WFG platinum partners. So that's an exciting news that's coming up, where we'll have the share of term product, which is number 1 in the market. We're gonna have our whole life, which is the most competitive, and we got CPP. We're getting best of all worlds together, which is gonna be amazing. But that being said, again, you know what? My point is to ensure that that trading is going to happen a lot. As soon as November is done, I'm super excited for 2024 because it's going to be a game changer. It's going to be a game changer. We would have more options on the table. We would have more products on the shelf, and we would have a lot of other trainings altogether that we'll be focusing on. Okay. But that being said, again, one last thing I want to show you before I close off my presentation. I think we still got time, right? Okay, perfect. So I'm going to show you the actual software. So the sky is the blue skies, right? So blue sun, blue sky. Saurabh, you guys have so many applications which has like all these different names. Just imagine blue sun is like a sun, right? Blue sky is a sky. So the sky owns this, like the sun, right? So I try to where like sun is CPP, sky is Foresters, and Foresters own CPP. That is why you can just remember it like that. Well, I don't know if that helps, but anyways, the point is, over here we got the illustration, right? Just make it simple. I'm going to make it very simple for you. You don't have to get complicated with this whole software. The only 2 tabs that you need to know is client data and basic data. Okay, that is it. The client data is basically, again, you just put the client's name, age, male, smoker or non-smoker, right? Basic data is where you choose the option.
Suspected spam.
For example, right? And male non-smoker, 250,000 coverage. The way you see it, how this is divided into basic and enhanced, I want you to understand it has nothing to do with the coverage. The client still gets $250,000. So you don't have to, have them confused with different things. It's just to make sure that the premium gets affordable for them. That is why we get the basic insurance of 143 and we get like a term of 106. Okay, so a 1-year term of 106, and our dividends actually buy out the term and convert it into full time. So that's why the cash values would be a bit lower on this one as compared to paid up, but it's actually still great. Okay, now annual we can do monthly. The most common 90% of the time I see is 20 pay. There's no reason for you to go with 100 pay because it would be expensive for them. But let's say you go with 20 pay, right? So 20 pay, within 20 years they pay it and then it's done, right? The dividend scale, you don't have to actually touch this. This is mainly for the compliance purposes, where you're like, hey, you know what? If the dividend is whole 1% lesser, then what happens, right? Well, you don't have to change it. This is just for there, right? And I can tell you that our dividend history for the years, we have never missed any dividend payment. So for these long years of 150 years, imagine the strength of the company. Now, CPP is so happy to be backed by such company. But anyways, not deviating from the topic. But what I'm trying to tell you is that, look at here. So 593, right? So $593. Let's say the underwriting team comes and tells you, hey, you know what? We're going to rate them at 200%. So from 593, it goes to 718. Instead of 593 going to $1,200 roughly, right? 718, just an increase of 20%. That is huge, right? Again, if I take it out, let's say this, I make it as $100, right? Let's say this is 593. The client is a smoker. So 593, the client is a smoker. So the initial premium is going to be 646. So for first 2 years, it's still going to be 646. If they quit smoking, well, that's great. It's 646. But in the third year, if they do not quit smoking, it's not going to go from 646 to 1,300. It's actually going to go to $800 and change. Right? So someone who's a smoker and does not actually intend to leave smoking, anyways, they're like, hey, you know what? I'm still going to enjoy 2 years of non-smoker rates, and I'm going to go ahead, right? But someone who's like first year is like, hey, you know what? I'm going to still smoke. I'm going to try because it's hard quitting it. Second year, I have to quit it because, you know, you have to be considered as a non-smoker 12 months, right? So second year, you have to quit smoking. So 1 year is a honeymoon period for you. But anyways, and third year, you have to quit it, right? But anyways, what I'm trying to show you over here is non-smoker, right? Age 55. You see how it's over here, you see this printer kind of icon. So print preview, you actually print it, right? So today I'm going to show you that dividend scale has nothing to do with the rate of return, because the client is not going to come and ask you, hey, what was my dividend scale last year? They're going to ask you, how much money did I make? That's a simple question. If I'm a client, I'm like, hey, you know what? How much money did you make me, right? So amazing benefits over here as well. 250,000 coverage. Look at this. Forrester is giving 1,667 as a charity benefit for free from their pocket. So the client passes away, they mention in their will that this is my favorite charity that I want to donate to. This is given by Foresters. No additional premium paid by the clients. This is for free, another member benefit, right? Charity or benefit altogether. Now, if it's a $250,000, so let me pull this here. Where did it go? Come on, buddy. We just started in the morning. Okay, so 250,000 rate band, no medicals or fluids. So it all depends on the ages and the medical bands and all that stuff. So always refer the underwriting guide. But what I want to show you today is actually the number here, right? So the cash value. So let's look at this, right?
What the?
So as everyone says, you know, so year 6, let's say we look at it at whatever. So you tell me. So let's say we look at this year, right? So the client has been there for 11 and 12. Well, he started at 55, he's 56 now. And then by age of 67, he's going to retire, like for example, and this is year 12 of a policy. As I said, the dividend scale has nothing to do with the rate of return. And let me show you a calculation. The calculation is ending value. So this is beginning. The first value is beginning and this is ending. Okay. The calculation is ending value minus beginning value. Okay, so the difference between, so let's pull up one calculator, anyone over here, let's pull up one calculator quickly. And we're going to do is ending value is 38,469. And then we minus that by the beginning value, 31,973. And we get a difference of 6,496. We divide that by the beginning value. Again, so we divide that by the beginning value, which is dividing it by 31,973. Okay. And we multiply that by 100. The rate of return that I've got is 20%. Does that has anything related to my 5.5 versus another company's 7 or 6 or 6.5? It has nothing to do, because the client is not going to come and ask you what my dividend scale was last year. They're going to ask you how much money did you make, right? And you take an example, 20% return. Why is that? Because this company gives back to the community. They don't have to please any shareholders. They give it back to the members, right? Now you have to understand that whenever next time someone tells you that, hey, you know what, this is dividend scale, please ask them, well, that is great, but what's my rate of return? So imagine this 31,000, as soon as this comes on your financial statement, that's guaranteed. That's for you. No matter the market crashes tomorrow, the equity market falls down, whatever happens, this is yours. That is it. End of story. Next year, it's just going to increase. It's not going to decrease. It can go from 31 to 32, but it will never go from 31 to 30. Okay. So the point is, this software might be, might be new for you guys or whatever it is, but it all comes with training. And I want to ensure that I can tell you this is the best in the market. And you just have to ensure we give it a shot over here. Let's do more trainings on that. And when the term comes in, it's going to be a game changer. Okay. So with that, I just want to make sure I stop my presentation today. I hope this was helpful. I know that there were a few questions that we had in the chat box, so I'll see if that comes in. But meanwhile, let me go to the questions quickly, okay? So